Hi guys, welcome back. Well, the party is starting to get going here in Dubai, but we're not done yet. We've got another great panel of guests on. I want to welcome Conor from Avantgarde, Timothy from
Avelacom,
and my good friend Alessandro from Fasanara. Welcome, guys.
Thanks for having us.
Thank you very much.
Good stuff. So, firstly, how are we finding Dubai and Token?
Loving Dubai. I'm a local guy in Abu Dhabi, so
really?
For me it's nice. 1 hour drive, come down here, get to enjoy the beautiful weather, nice events and stuff. So I can't complain. Yeah.
So, do you guys want to? And Conor, we'll start with you.
Yeah.
Like, just give us a little bit of background on what you guys are doing and where your kind of focus is.
Yeah. So basically, we're a DeFi native asset management firm. So we have like regulated crypto funds that we actually manage entirely on chain. So we don't trade on centralized exchanges. Obviously, we use DEXs, etc. Then we also do treasury management for DAOs and foundations. So in total, we're managing about $70-80 million. Majority of that at the moment is on the treasury side. And we're running some interesting strategies for these, foundations that are, let's say, massively overexposed to their native token, 95% plus. In a bull market, that's great when prices are up massively. In a bear market, when you're down 90%, you second guess yourself. So yeah, we help them diversify and earn yield on their assets. And, we're a delegate in DeFi and do a few other things as well. So yeah.
And I'll go to you, Alessandro, just because of the sort of connection in terms of running a fund. Tell us about Fasanara.
Yeah, so Fasanara, first of all, Fasanara Capital is a traditional asset management. We manage approximately 5 billion in private credit. And since 2018, we started looking at crypto. So we launched Fasanara Digital. First fund we launched in 2019. We've been trading now for 6 years. It's a fully delta neutral fund. So we do everything from funding arbitrage to cross-exchange arbitrage and market making. And recently we also launched a multi-strat where we cover basically everything else. Directional, market neutral, statistical arbitrage.
Good stuff. And Timothy, you're connecting and plugging all these guys in.
Yeah, exactly. So maybe not so much for the DEXs because we don't really know where the DEXs are, but definitely for him. So we basically, Avelacom in a nutshell is a technology service provider. We specialize in providing ultra low latency connectivities between major exchanges. Deribit is obviously now on the cloud, so we provide physical connections into London for Deribit clients. For other exchanges around the world that mostly are cloud-based, we provide basically the highway between them for the HFTs, for the market makers, for cross-exchange arbitrage. From there, we expand a little bit. We also provide co-location services for certain locations like Deribit. That's one of those important places. But at Avelacom, traditionally, we actually started off as a TradFi company. Our majority of our existing clients actually came from a TradFi side of things. We didn't really expand into the crypto scene until a few years ago. And that's how much the market has changed, really. And sitting from Hong Kong, Asia Pacific itself is massively overtaken by the crypto scene. Revenue-wise, the growth generated by crypto clients has overtaken traditional finance by miles.
Really?
Yeah. Yes.
Interesting. Yeah. And like, obviously, like within that, how are you seeing, and particularly because it feels things have really changed in the last, well, certainly since the US administration's come in, how are you seeing that kind of client list evolve and change over that time in crypto specifically?
So I have only been with Avelacom for 2 years.
Right.
2 years and 2 months. So I could only speak for the past 2 years and 2 months. What I'm seeing is the crypto traders, the HFTs, the market makers on the crypto side of things are getting more and more TradFi-like. They're like, when I first started, majority of them have no idea how network even works. They in their mentality is internet, is your mobile phone, is the fiber that goes to your home. You open your browser and then you go to google.com. That's how they were 2 years ago. Nowadays, they're talking to you about FPGA cards, dedicated switch, layer 2, layer 1 connectivities. They're talking about microwaves with you, with, educated knowledge. They're not just bluffing you. So I think that is a big change. So in 2 years' time, they went from kindergarten to professionals when it comes to network.
Some homework, yes.
Yes. Semi-professional, yeah. So that's how much it has changed over the past 2 years. And back in the days, if you speak to the clients about 0.1 milliseconds, 0.2 milliseconds differences, they're not going to care too much, right? Now, if you tell them there's a new path that comes out that is 0.2 milliseconds faster, man, I'll be swimming in cash that quarter. So everybody will be jumping on. So that's how much, that's how, I think one change is people are getting more sophisticated. The other change is that the overall crypto environment has gone more competitive overall.
Yeah.
And this is because some of the TradFi player came in.
Yeah, not some. I would say majority of them came in. Yeah, and but you'll be surprised. It is a blessing and a curse when the TradFi people came in and play with crypto, right? Because it's very difficult for them to ditch the TradFi mindset. They always want to come in playing big guys, all muscle up. We want everything in full control. We're going to burn cash, buy hardware, buy co-location. We'll get all the FPGA in place. We'll get all the Sienna in place. They end up burning millions of dollars even without even getting started yet. So, and then once they get everything in place, they will be frustrated because they can't control the in-cloud on-RAM latency. So it's like, it's a blessing and a curse. And then it's the reason why the smaller players could still survive nowadays, given that the big guys has, all showed up. Because for the big guys to wrap their head around having, piles of cash is not king in this world is difficult, and it takes time.
Yeah. What was it like for you guys? How, obviously, as some of these traditional firms have come in, they've kind of squeezed margins. How has your product set evolved and your investment strategies evolved within that?
Well, I would say when we started, obviously, as he was saying, 6 years ago, it was already nice to close the trade, whatever, 1 second, it was fine, to be honest. But then you keep on investing, you keep on hiring, and you do hire from those firms, people that want to start moving towards crypto, bring the expertise, but without that baggage necessarily, because as they come in joining a crypto team, they're a little bit more open-minded. So ultimately has been work of year after year after year, focusing more and more on being faster, better models, and yes, margin has shrunk, but eventually this has been compensated by our ability to improve execution, improve the speed, more servers, more locations, dedicated agreements with the right counterparties to make sure that our orders reaches the exchanges as fast as possible. And our volumes are growing, our margins remain healthy. So we haven't really suffered the big institutions. And the positive side is that not only HFTs have joined from TradFi, but also mid-frequency players, which on the other end have created trading opportunities by, having massive positions that dislocate the market. So there is the pro and the con.
Yeah, interesting. And well, I mean, in the DeFi space, right, it must be a minefield in terms of trying to structure a portfolio and a strategy with so many different kind of yield opportunities. Like, how do you guys approach that, and how do those strategies evolve?
Yeah, well, it's interesting, right, because you don't have the same number of institutions and TradFi coming into DeFi necessarily yet. They're sort of like dipping their toe, but I don't think you have, mass adoption or mass usage, right? So it's more like niche players like ourselves that kind of come from TradFi but understand the DeFi space that are really exploring that. So that's the first thing I'd say. But it's really just about like keeping on top of the market, understanding what protocols are coming out, not chasing yield where it looks attractive simply because they're offering a high APY.
Yeah.
You can easily go out there and get 20, 30% on stable coins. It just depends what your risk profile is, the types of clients that you're working with, what they're looking for. So for example, with our stablecoin yield fund, that product's been live for about 12 months now, and we're averaging around 10% APY. So like last December, it was up at 21%. Now it's down at 6%. So it does vary depending on like market conditions. But we're pretty thorough with like looking at smart contract risk of the protocols we're allocating to, the depths of the pools. We do a lot of research into it. So yeah, if that kind of answers your question.
Yeah, no, it does. And like
so let me steal your job.
Please do.
I don't know if you guys do any DeFi-CeFi arbitrage, because in that side of the market, then the speed becomes interesting. And contrary to what you're saying, you sort of know where the staking the nodes are, and you need to be close enough to get a look at the mempool faster than the other guys. So I don't know if
we don't do any CeFi DeFi arbitrage, so we're primarily just DeFi only. So that, yeah, in that case for us, it's not relevant. But
Maybe you will in the future. Who knows?
we will after this conversation.
So,
exactly.
It's funny that you brought that up too, because just now we talked about the TradFi people coming to the DeFi space, and you talked about they're just basically dipping their toe in the water, testing things. They're not really that good at it yet. I would say majority of them are. There are a couple of them really good, right? But the other way around is actually happening. In the past 6 months, is this one of the trends that I mentioned earlier, is that in the past 6 months, there is quite a significant growth of DeFi people going, DeFi people going TradFi. And the growth is actually getting more and more significant. And these growth are primarily being driven out of China and India. You got all these people with money in the DeFi world that wants to monetize the TradFi world as well. And they sort of look, they come to me and say, "Hey, Tim, where's a good market to trade?" I was like, if I know, I would not be working for Avelacom. But I can tell you where business is good, right? So, and we have good relationship with TradFi markets. And some of these very interesting ones, like, that CME, B3 in Sao Paulo, they are doing futures trades there. And these DeFi people would certainly look into it for those kind of things, but it's very early stage.
Yeah. And like, are you seeing, like, it feels to me, and you might say it different, like traditional guys are still some ways away from like the DeFi space. Yeah. They're getting their head around crypto.
Yeah.
DeFi
that's really accurate, right? Because like, imagine you've been in TradFi for 20 years, and now you have this like new financial ecosystem on the blockchain. You're going to start with what you feel comfortable with. So you'll start with like a traditional fund structure that invests in crypto, not on chain. You'll start with a centralized exchange. You know what I mean? It's like more familiar to them. Yeah. But really, if you think about it, DeFi is just recreating the financial products and systems that we have today, but replacing people with smart contracts. So I think it's not as like far away from what they understand as they might think, like once you kind of actually wrap your head around it. Yeah. So it'll be interesting to see where it goes. And there is definitely like a massive convergence now, I think, between TradFi and DeFi.
I agree.
Because I guess tokenization is the keyword in this
for sure,
case, right? Yeah. This is really the bridge connecting the two worlds. Even ourselves, we are tokenizing some of our credit products. Yep. These become collateral on the lending protocols in DeFi, and the two worlds are really merging now.
I recently had this interesting conversation with a TradFi exchange. I can't name names, but one of the very well-established TradFi exchange, and they were talking about the future of stock markets. And it's the first time I heard it from actually somebody who works for a stock exchange that say in my face that they believe that stock exchange will no longer exist in the next 20 to 30 years. They will be gone. And they have so many ideas that float around. One of them is basically replacing IPO with ICO, but issuing new coins based on the total asset that the company owned, and then backed that coin with the asset. So it's like new ideas are being pumped into the scene every day. Who knows?
Yeah. No, interesting. Do you guys as well think I've been saying for a while, obviously we've clearly been in a bull market price wise, but it's felt like we've still been in the depths of a bear market industry wise. Where do you think we are in that? Do you think we're now coming out, like certainly, and I look in certain businesses I've been involved in, like raising money and things like that. Last year was really difficult, and it feels like it's getting easier, but how are you seeing that?
So I think there are two elements to this, because these various cycles have different speed. The capital raising cycle, the interest from institutional investors is actually a very slow cycle. And as you're saying, this is on the way up now. We are clearly seeing much more interest from institutional players from US and Canada. And this really started moving from the elections. Yeah. And I think this is a trend that is here to stay. Now the capital is getting deployed. In terms of market action itself, on the other end, even in that case, I think the worst is behind now. I think the action that we have seen in February, March is behind, and the future holds good peace.
I'm very optimistic on markets actually at the moment. I think people don't really understand what's coming. You just had Mubadala Sovereign Wealth Fund in Abu Dhabi invest $400 million in the BlackRock ETF. Yeah. I was listening to an interview with Bo Hines, I don't know what his job title is, head of digital assets at the White House. And they're literally talking about using tariff revenue and other means to buy digital assets for the strategic reserve of the United States. I think we're a lot closer to like this mass adoption than people think. You know, Bitcoin's at $95,000 today, and people are a bit like, meh, you know what I mean? Like, 5 years ago, people would have gone crazy at that. So I think we just adapt to the new normal. And I think, you know, like obviously, the broader altcoin market has taken a hit. Like Bitcoin dominance is kind of rising. But historically, when we get to about 70% Bitcoin dominance, it usually kind of falls off and then altcoins go up. So that's sort of what I'm looking for in the next 3 to 6 months. Yeah.
Well, look, on that bullish, positive note, let's wrap this up, guys. Thanks for coming. The party's kicking off, so let's go and enjoy.
Let's do it.
Awesome. Thank you so much.
Thanks, guys.
Thank you.
Appreciate it. Thank you.